Okay. We will start for today's session. People are there online, people are there offline. For people who don't know me, my name is G. Praveen Kumar. I'm a practicing chartered accountant. We have sessions on GSTR3B, which is planned today and tomorrow. So day 1, day 2. Day 1, what I will do is I'll try to make you understand the purpose of GSTR3B, what details are relevant for filing our GSTR3B, and also what is the norms which the government has put by way of your electronic credit ledger reclaimable statement, and also something called IMS. This I'll try to explain. Day 2, that is tomorrow, we will try to understand the overview of Form GSTR3B. We will run through the detailed contents. What is that? We have to fill in each table in Form GSTR3B. On the basis of the learning which we have from day 1, we will try to understand how do we keep a track for the data with respect to filing of Form GSTR3B. If we on the basis of the initial learning what we have on day 1, we will have better clarity how do we fill our Form GSTR3B. This is the overview how we are going to have this day 1, day 2 session. Now, before we begin, let us understand one aspect called self-assessment. Under GST law, we have a requirement called self-assessment. This is covered under section 59. We'll try to look at that section 59 and come back again. You can see this self-assessment. The term self-assessment means every registered person shall assess the taxes payable under this Act and furnish a return for each tax period as specified under section 39. So this is your simple definition, which is called self-assessment. Now, they say every registered person, the person who have obtained GST, that person will be called as a registered person. Casual taxable person, non-resident taxable person, any GST number we have, we are a registered person, shall self-assess. Means I do my own assessment. We would come across this term self-assessment like people who have paid property tax, people who have paid income tax, or any other tax. We would come across this term called self-assessed. So I, as a taxpayer, when I do the assessment, it's called self-assessment. Someone else does the assessment. What do we call that as? That's called provisional assessment. Self-assessment is what I do. What others do on my behalf is called provisional assessment. Provisional assessment. Why others do provisional assessment? This is done when I fail to do self-assessment. I fail to do self-assessment, then I go to the proper officer. This particular proper officer will be doing this assessment. So this is called your self-assessment. Now, what is it they say? Every registered person shall self-assess taxes payable. They say taxes payable. Under this act, that is Central GST, furnish a return for each tax period as specified. Now, they say each tax period. Now, when I say tax period, this could be a month. This could be a month as specified under section 39. Now, this is what important for us to learn. Now, I'll give a simple example before I come to this term called written. When someone talks about financial statements, financial statements include profit and loss account, balance sheet, notes to accounts. This is your financial statements. Does it include trial balance, general ledger, cash day book, or bank day book? Now, please understand, these are all secondary, which aid for us to prepare my financial statements. Without this, I cannot prepare P&L account, balance sheet, notes to accounts. Now, similarly, the term written which is used is something which is important. We need to understand. Now, people generally say, whenever someone says GSTR, GST written, my GSTR1, GSTR6, or GSTR2B, GSTR3B, they believe that all these are GST returns. Law says not everything is written. Written is something which is specified under section 39. So what is specified under section 39? That is called as a GST return. So what if it is not coming under section 39? Then it is not a return. So in simple terms, written means something which is specified under section 39. This is what we need to keep in mind. Is this clear? People who are there online?
Yes, clear.
Okay. Jaswita, Repika, Venkatesh.
Clear.
Yes, sir.
Clear.
Okay, fine. Now, let's look at what is there under this 39. See, this is what your 39 talks about. Furnishing of returns. Furnishing of returns. Every registered person other than ISD, NRTP, or person paying under Section 10. Section 10 is your composition. Section 51, TDS. Section 52, TCS. Shall, for every calendar month or part thereof, furnish a return electronically of inward-outward supply of goods or services or both. They're saying that you should file a return for every calendar month, that is monthly basis, or part thereof. Now, can I file for 15 days? Answer is, when you have obtained a registration, you have transactions only for 15 days. Those 15 days needs to be considered for filing a return. They furnish a return electronically of inward and outward supply of goods and services are both. They say this return will be consisting of data which is called inward. Inward is your purchases. Outward is your sales. Purchases and sales of goods or services or both. Input tax availed, tax payable, tax paid, and such other particulars. Tomorrow when we see the return, you'll get more clarity, such other particulars. In such form and manner, within such time and subject to such conditions as may be prescribed. Now, when they say as may be prescribed, the rules are there which prescribes under section 39. So as on today, This, when we read this subsection 1, it is GSTR3B, which is covered as a written. GSTR1 is not a written, that is a statement. Then register person paying tax under section 10. This is composition written. Register person required to deduct tax, TDS written. Similarly, ISD written. NRTP, non-resident taxable person, again that is a written, GSTR 7. So these forms which are mentioned in section 39 is called as our written. So learning from here, section 39, we have something called GSTR3B, GSTR6, then GSTR 7. So for our limited understanding, these two we will not discuss. We will discuss only about GSTR3B. Now, what is the information they're asking? They're asking details of inward supply, details of outward supply. Predominantly, this is my purchase. This is my sales. So when you visualize your P&L account, assuming this is my P&L account, this is my expense, this is my income. So on expenses, you have input tax credit. On income, you have output tax. This is input tax avail. This is output tax payable. This is what they were referring in section 39. They're saying that input tax credit availed, tax payable, tax paid. So tax payable is on the sales. How did you pay your tax? This is what they're asking. So when we say tax payable and tax paid, this tax payment will happen like this. I can make the payment of tax through credit or cash ledger. This is a basic understanding what section 39 talks about your inward supply, outward supply. On this inward supply, outward supply, your input tax credit avail and your output tax payable. This is your basic understanding with respect to filing of returns. Now, please keep in mind, all this, whatever we are doing, the moola, the base is your section 59. What is your 59? Self-assessment. Self-assessment. That means to say, I determine what is my purchase. I determine what is my sale. On the basis of this, what is the tax payable and tax paid. Now, when we talk about this tax payable, tax paid, somewhere we were talking about your inward supply, purchases. In purchases, you have section 16, section 17, section 18. All these provisions talk about, in addition to this, you have rule 42, rule 43, which talks about your eligibility to avail input tax credit. So please keep in mind, the GST law is expecting that, look, you do your accounting, you do your monthly accounting. When you do your accounting, what all purchases you have? On that, what input tax credit you are taking? When you're taking input tax credit, have you read section 16, where you talk about eligibility? You talk about section 17, which we talks about block credit. Section 18, certain circumstances under which I either take the credit or I reverse the credit. So all these provisions we need to understand to say how much input tax credit I'm eligible. So when I'm doing on my own assessment, this is called self-assessment. This is what the law is expecting us to do with respect to filing of returns, self-assessment. Now, one simple example before we go further. Let's take one example saying that, say there is a purchase. There is a purchase of a motor car. This motor car has got a seating capacity, say less than 13. Now, when we look at this motor car, we have section 17, which talks about your block credit. As per section 17, I'm not supposed to claim input tax credit in relation to motor car, subject to few conditions. Now, there is a company called XYZ Limited. This XYZ Limited has purchased this car for the purpose of director and HOD of, say, production and quality. They say, so if the factory is, my factory is located 60 kilometers from the city, this particular travel cannot be done by a bus and all. For the commutation purpose, I use this car for the purpose of directors. This is the fact they give. Now, for a moment, if the accountant who works in this company without knowledge avails input tax credit, now which is blocked under GST law, then the GST officer will say that, look, you claimed input tax credit, which is ineligible. So because you have claimed ineligible input tax credit, he will say there is an intent to evade tax. This is an allegation which the GST officer is going to put on the company. So the GST officer will say, you have a intention not to pay tax. You evaded tax. So when they say evasion of tax, this is more like a fraud. Now, the moment they say you have evaded, you have not paid tax, you are fraud, then there is a punishment. Which is called penalty. This penalty is 100% of tax. 100% of tax. So here, this is what in general, whenever there is an audit which gets conducted under the GST law and they come across something wrong, there is a possibility that officers frame their opinion in this manner. So for avoiding this kind of mistakes, what we do is, whenever we have a doubt, companies generally take a legal opinion. Now, this legal opinion will be a write-up which is given by a professional. Based on this write-up, the company will claim or put as an expense for this particular input tax credit. So why we are talking all about this? The connection again is coming from here. Self-assessment tax. Sir, I don't have a subject knowledge. I approached a professional. Professional guided me that I can claim input tax credit. When this particular professional guidance is there, this element of fraud cannot be applied. So whenever GST officer comes for audit, we will say, sir, I have not taken input tax credit on my own because there is a professional guided me. On that basis, I have taken the credit. This will help me to prove that this self-assessment is on the basis of a expert knowledge. Though I fail, I took an expert knowledge. Where he will, instead of 100% tax as a penalty, 10% of tax may be applied as penalty. This is a way we avoid the penalty from 100% to 10%. Coming.
Discretion, less penalty.
No. If officer establishes that there is an intent, if there is an intent which is established, then 100% he has to levy. If he fail to establish, then he don't have a choice. He has to levy 10%. Sir, how does we get this intention established? I'll say, so this is opinion. I didn't do on my basis. On the guidance, I did that. Then the officer will not have a choice to say that it is intentional. Now, professional, the advocate, chartered accountant, whoever is given their opinion, it is their opinion. I just took their opinion, followed their opinion. So there is no intention to evade either. Coming back. Now, this is where the self-assessment written all comes about. Moving further, your GST returns. My GST returns are automated. We are in 2026. This GST law started in 2017. The journey from 2017 till 2026, almost say 9 years. In 2017, when they started the GST law, this was semi-automated. As on 2026, this is more automated. Like people who are doing their CA, people who have done their CA, now we would correlate. There was a manual books, there was a manual teaching. From manual, we came to semi-automated teaching. Now everything is automated. The guru for all, AI, artificial intelligence. So this is how automation took place. Now, this is what even the government is looking for your returns as on today. The backbone, why this happened, if you try to understand. The fact is, assuming there is a GST officer who is called as a range officer. This particular range will have on an average 500 to 1000 taxpayers. Now, one office, one chartered accountant, at best can handle 10 clients. Imagine a GST officer who is the superintendent of a range. He has got 500 to 1000 taxpayers. Is it easy to monitor all these 500 to 1000? Impossible. So whenever we talk about the GST audit also, the departmental audit, every officer has got an average 50 audits per month. Now, when we do this GST annual returns, GST monthly audit and all, handling 10 to 20 clients, we say, abba. Now, when we look from the auditor's point of view, the GST government, it is very cumbersome for them to do the audit. This is where the government said, let's do automation. Now, this automation is the backbone why we are having all today's discussion. This led to some mantra which they say, data shall be auto-populated. Data shall be auto-populated. So that means to say, when we look at your GST return, this GST return, what we are talking today is GSTR3B, which is your monthly or quarterly return. Now here you have something called inward supply. This has got something called outward supply. Now this is my purchase. This is my sales. So they say automation will happen like this. Your inward supply is linked with the GSTR1 of the supplier. Government said that, look, you don't do anything. I'll make your life easy. Whenever the government notification comes to make the things easy, no, it is going to create a complexity. Though the intention is to make the life easy, unknowingly they make things complicated. So they say, don't worry. Your purchases, all your purchases are linked with your GSTR1, which is filed by your supplier. Or there is one quarterly statement called IFF. People who file returns on quarterly basis, month one, month two, they file IFF. Month three, they file GSTR1. So they have brought a simplified filing mechanism. People who have less than 5 crore, they can opt for IFF, month one, month two, invoice furnishing facility. So based on this statement, I would call this as a statement. Now, this is nothing but your GSTR1 or IFF. Based on the statement filed by the supplier, there's a form which is called GSTR2B. This gets updated. This is the data which flows to your inward supply, that is your purchase. With respect to your sales, they are saying that, look, you have filed your outward supply. You have filed your outward supply, which is called GSTR1. On the basis of GSTR1, there is a data which is auto-populated, which is called outward supply. So here they say your purchases is auto-populated into a form called 2B. Your outward supply on the basis of GSTR1 comes directly sits in your outward supply. Do I do any manual entry? Answer is very little. They say yes. What is that? In relation to reverse charge mechanism, what is your tax payable and what is your tax eligible to avail? My GSTR3B limited manual entry. There is an automation for your purchase. There is an automation for sales. Only thing with respect to reverse charge, they are saying that please do a manual entry. This is where they come for. Are we clear so far? Automation and all. Vishal, Jashwika, Repika, Manish.
Yes, I clear.
Yes,
Yes,
sir.
sir.
Now, see, slowly I'm going step by step. This is where the complexity is going to build. Now, having said that, there's one important provision which is there under section 75, subsection 12. I'll just show you that. Government has said that, look, I gave a mechanism which is called populated data. Now there are some buddhi people who wanted to save the tax. That is where this provision was brought in. Government says that notwithstanding anything contained in 73 or 74 or 74A, forget that. They say where any amount of self-assessed tax. They say any amount of self-assessed tax. Now, when I say self-assessed tax, that is your tax payable in accordance with a return, whenever you file a return, which is furnished under 39, that is your 3B, remains unpaid. My self-assessed tax ought to be paid but not paid. I'll explain how it will happen. They're saying that you filed a return, but there is a self-assessment tax to be paid but not paid. How? Either wholly or partly or amount of interest payable on such tax remains unpaid, the same shall be recovered under section 79. Recovery provisions under 79, they do a bank account attachment and all. Explanation. For the purpose, this is the important crux for us. For the purpose of this subsection, that is subsection 12, the amount self-assessed tax shall include tax payable in respect of details of outward supply furnished under 37, but not included in the return furnished under 39. What is that you have included in 37, but what is that you have not brought under 39? This is the crux. I'll explain this. So section 75, subsection 12, quite interesting one. They say that tax payable which remains unpaid. This is either wholly or partly. So here government said that, look, you did your self-assessment, right? So there is a statement called GSTR1. There's a written called GSTR3B. Now, this is where the practical issues start. Like there will be a client who is a contractor. This contractor comes and says, sir, I have given a bill for 1 crore. On 1 crore, the GST comes to 18 lakhs. Sir, I don't have money. Sir, if I give a bill to my client, then he will process my payment. So what I will do, say this bill is given in the month of April 25. This bill goes to approval somewhere in May 25 by the engineer at the client side. This bill goes to the accounts department in June 25. After TDS and all, somewhere in August, say 25, the bill is getting paid. Now, this is a practical situation. So what does the client will say? Sir, let's give the bill. Let us bill for 1 crore. Let us show 18 lakhs and let me file GSTR1. When it comes to 3B, sir, my bank account has got only 12 lakhs. I need to pay salary. I cannot pay GST. So he'll say, sir, do one thing. You show my output tax 18 lakhs over here. In returns, show only 1 lakh turnover on 1 lakh 18,000 as my tax. Look at the logic. Huh? On 1 crore, 18 lakhs is your tax. So he'll say, sir, you tell there is a clerical error. I forgot to add a 0. So 1 crore was made as 1 lakh. 2 zeros, 1 0, 2 zeros is removed. That 100 lakhs, he removed that 100 and 1 lakh he kept. 18 lakhs, again, that 2 zeros he removed and made this as 18,000. So he wanted to file that. Why? The GST officer now, he will see, like, no, like there's a window. GSTR1 filing, green color, good assessee. 3B filing, green color, good assessee. So when 1 is filed, 3B is filed, for him in the dashboard, green color is shown. So he feels, this particular contractor, no, very genuine fellow. He filed GSTR1, he filed GSTR3B. This is where 7512 comes into picture, where he says, under 75, there's a tax payable which remains unpaid, either wholly or partly. Why? There is a gap between GSTR1 and GSTR3B. Now, this is where they say the tax to be paid but not paid. If not paid, recovery under section 79 comes into picture. So, the moment you say, sir, I have filed GSTR1, I have filed GSTR3B, and I have paid all the taxes, any gap is there, that, this gap, this particular gap is called as tax payable, which remains unpaid. Right? Now, this is a scenario which I'm talking initially, 2017, 2018, we were doing along. Sir, there is no auto population, there is no automation. Even the GST officer didn't know. So when automation came in now, then they said that this 7512, to the extent it may not remain. Why? The principle is the government is looking from a GST officer who has got this bandwidth of the taxpayers. thanks to technology, number of people who are doing business has gone up and without any control, especially after e-commerce. Swiggy, Zomato, Amazon, Flipkart has come. People are doing small time business at home. Like, no, say people are good in making home food. Now you prepare a food, someone will come, you pack, they'll pick and give a delivery. You need not have a hotel itself. You need not have a commercial name board. Now, because of e-commerce, like, no, government regulations where they deduct TCS, TDS, these people are coming into the tax bracket where the moment their turnover is more than 20 lakhs, they ought to get registered under GST. The database of the taxpayer is increasing. Even the burden on the tax officer is also increasing. This is where this automation came in. Now, the government said that, look, in your GSTR3B, in your GSTR3B, your output tax, I would like to freeze the details. That means to say, this output tax is flowing from your GSTR1. GSTR1. 2B is your purchase. GSTR1 is your outward supply. Why? Government said, look, I know you are going to do this kind of hera-fairy, hanky-panky. To avoid these kind of hanky-panky things, I wanted to freeze the figures which are going to come from your GSTR1. Now, if you look at the dates, say for month 1, assuming it starts on 1st, ends on 30th, my GSTR1 complaints. In month 2, my GSTR1 has to be filed on or before 11th of month 2. GSTR3B has to be filed on 20th. So what government has made, they said that in between on 14th, your 2B is going to be available. So GSTR1 is your outward, GSTR2B is your inward. These two statements, they say, I'm going to do automation. So once they do automation, whatever GSTR1 you file, that comes and sits in your GSTR3B. That comes and sits in your GSTR3B. Now the question came, sir, everything is good, but sir, we are in India. You forgot that we are in India. Now, why do they say that? Anything happens in India. That's what we say now. So what is that anything may happen? After filing GSTR1, filing, my accountant or my client comes up with new things. Sir, GST rate is wrong. Or the GST base amount is...
हाँ हाँ सर आता क्लास है
Yes. Someone wants to say something? Okay. So when I find GST1, there are some mistakes like GST rate is wrongly mentioned, GST base amount is wrongly mentioned, or I should have issued a debit note. By mistake, I have issued a credit note. Any of these things will come into picture saying that, sir, on account of this, my output tax is wrong. So now government is like a mother. Mother has to listen to all the children. So whatever practical difficulty you have, they have to come with a solution. So government said, don't worry, I'm there. They brought in something called GSTR1A. GSTR1A is a window. They say that, look, you can do a correction to either increase or decrease your liability. So this GSTR 1A can be used to rectify the mistakes. And this can be done up to filing GSTR 3B. So whatever mistakes you have done, this can be rectified to alter my liability. This is where GSTR 1A has come into picture. Are we clear? Intention of the government, background why this GSTR 1A has come into picture, we need to understand. So here government says that you do your complaints of filing of GSTR 1. Subsequent to filing of GSTR 1, on 11th you have filed, you have noticed that there are some mistakes. Those mistakes, you have a window for making a correction through Form GSTR 1A. Somewhere in August 2024, this mechanism came into picture. Again, background, for the purpose of automation, this has come into picture. Government said, I'm going to freeze your liability. Because you want to alter, use your window called GSTR 1A. Now, when we think about GSTR 1A, to increase the liability, to decrease the liability, I can use GSTR 1A. But, sir, I need to amend. Amend what? Not invoice, the GST number. Like I have filed, say one particular invoice. Say there's an invoice number, tax invoice number 132. This I have to bill to A. But by mistake, I have billed to B. There's no liability which is going to change. Instead of the credit going to A, it has gone to B. Now this, they say that GSTR 1A is not a window. You do a correction in subsequent month. So this amendment, they say, do the correction in subsequent month GSTR 1. So to increase the liability, to decrease the liability, like this example. So instead of 1 crore, I've entered 10 lakhs. So 10 missed out. 0 doesn't have value. But I realize that that has a bigger value. So what shall I do? Then they say that using GSTR 1A, increase your liability. This is what they have said. Now, there is a challenge over here. Let's take one example. Say, for month 1, there is an invoice called, say, invoice number 132. This invoice number 132, the taxable value, tax. The taxable value is 1 lakh. The tax is, say, 18,000. Total 1,18,000. This is the actual scenario. By mistake, when I exported to Excel or when I did in a software, the taxable value is taken correctly, 1 lakh. But the tax, instead of 18%, it was applied at 5,000, 5%. 1,05,000 is what I have calculated in my Excel, and this only I have uploaded in my return R1. This I have released on 15th when my customer complained. Look, your physical invoice shows 18,000. Your physical invoice shows 18,000, but your tax invoice, like written what you have filed, shows only 5,000. Now, what I have to do? I use my GSTR 1A. Using my GSTR 1A, I can increase the tax liability from 5,000 to 18,000, where additional 13,000 is added in GSTR 1A. But assuming this is done in month 1, government said that this 13,000 effect will appear to the customer, the recipient. Yes. In month 2. Only in month 2, he could see this amended 13,000. Though you are doing your 1A amendment, the recipient will get the benefit of this in month 2. Now, what is happening here? Government is getting its money. My return is going properly to pay for the purpose of 75 subsection 12. Unfortunately, the customer recipient will have only 5,000. He'll get this 13,000 balance in month 2. This is what is going to happen. The government says, look, there are due dates. I have to honor the due dates. On 14th, I promised I'll give GSTR 2B to your customer. On 14th, the 2B was generated. This 2B shows only 5,000 as the input tax credit. Sorry. Month 1, your recipient will have 5K. Month 2, we could see that 8K. Whatever balance 13,000 is there, let him avail as a credit in month 2. This is what government said with respect to GSTR 1A. Are we clear? People are Jaswita, Repika, Venkatesh, Vishal, any doubts?
No, sir.
Okay. Now, this is where, see, every automation has got an advantage, disadvantage. So to some extent, government wanted to get this revenue gap 75-12 filled up. So that's why to put an end to this auto correction, they made a freezing of figures. Even then, if there are any mistakes, they have brought in this concept called GSTR 1E to do the corrections which we need. Now, are we happy? Answer would be no, because our will and wish keeps on getting added because of the business needs. So this is where, to some extent, they say your output tax is taken care, your customer requirement is also taken care. Now, moving further. This is in relation to my GSTR 1A. Now, next, they brought in with respect to your auto population of input tax credit. So they say that, look, GSTR 2B. Now this is one data, one source. On the basis of this is a auto-populated data. Now, can I alter? Answer is yes, I can alter. But the moment you alter, there will be a red color which gets shown when you alter. How? Like assuming there is auto-populated, my input tax of say IGST, 50,000. This is auto-populated. My altered data, scenario 1, scenario 2. 50,000 I made to 45,000. No red color. 50,000 I made as 56,000. Red color. So if you have claimed less, they're okay with that. But if you have claimed more, then you're going to have an indicator that boss, watch out. You're going to get a notice. This is what they're talking about. So this indicator, why they wanted to bring is, let the data be auto-populated and you don't alter your data. Now, there are scenarios where when we read section 16 for claiming input tax credit, so there is one condition. The goods or services to be received to claim ITC. So for a moment, so month 1, my vendor uploaded his R1. Based on R1, the ITC got auto-populated. But actual receipt of goods happened in month 2. So as per section 16, my claim or eligibility is only month 2 and not month 1. So in this scenario, they have brought some disclosure mechanism where in month 1, I'll say, I park to claim later and I claim at a later point in time. This is what would be my interest. Now to address this, they brought one more window, which is called ECRCS. Seeing that electronic credit reclaimable statement. Electronic credit reclaimable statement. Now, slowly, we are going to the little more technical aspects of it. Intent of these things, what they have brought is, intention is automation. Everything should be automated. You try to change something, now please justify by way of a disclosure. So wherever you alter, to explain this alteration, there's a disclosure which they are asking us to maintain. So this is where your input tax credit, which is auto-populated. If you have claimed lesser, they're okay with this. If you have claimed more, you need to give a explanation. Now, when you are asked to give explanation, everyone has got their own English. Officer has got his own English. So what I tell, what he read will not be matching. So not to have this explanation, they brought automation like these windows. In relation to input tax credit, this ECRCS came into picture. I'll explain this ECRCS for a better understanding. Now, again, there's a some understanding the purpose base for this ECRCS. Now, there is something called settlement of funds between union and state. Where we have this union is nothing but the central government, state or union territory. Government said that, look, when the registered person, had made a purchase, he has a choice to claim input tax credit, not to claim input tax credit. Now, when the registered person claims input tax credit, this gets offset with output tax. Correct? So when I have claimed input tax credit, whatever output tax is there, I do offset. So they say that to the extent of this input tax credit, this is not a revenue to the government. So the government is not getting any money out of this input tax credit. Now, where the government is getting money, this not to claim ITC is, we call ineligible. Ineligible ITC. Now, this is a revenue. This is a revenue to government. Like example, say block credit. When I have purchased 10 cars, each car is worth around 10 lakh. On the car, I have paid say 40,000, 4 lakh as tax. 10 cars, 4 lakh into 10, 40 lakhs. Now that 40 lakhs becomes a revenue to the state or central government. So the government is interested in this revenue. Now, assuming there is a IGST which is ineligible. Out of this IGST ineligible, 50% will go to the central government 50% will go to the state government or union territory. This is where Karnataka, across India, Karnataka have realized that when a taxpayer disclose the tax properly, including, then the taxpayer discloses the tax properly in the return, including ineligible. This is where the state government gets proper share. This is where the government started pushing the SSC. Look, whatever purchases is there, on purchases, don't alter. Show eligible, show ineligible. When you disclose ineligible, I'm going to get my share of revenue from the central government. This is where every state started pushing the taxpayers. Now again, government felt to make this settlement proper, let me have this disclosure of ITC freeze, at least to some extent. Now, this is the backbone where government said that whatever input tax comes, either you claim the credit or you don't claim the credit. Clear now? Now, from here, the thought process came like this. So there is a auto-populated credit. This auto-populated credit, whatever you have on account of IGST, SGST, say CGST and SGST. Now, this auto-populated credit, what you can do, option 1, accept and avail. Whatever credit has been auto-populated, when I look bill-wise, sir, exactly those credits are matching as per my books. So I accept and I avail. Option number 1. Option number 2. I can accept in subsequent month as per section 16 condition. So I have a credit. I don't want to avail in this month, but I want to avail in the next month or maybe some other month. Option 3. No clarity, need to ascertain. That means, say there's a credit which is appearing. I don't know whether it is my vendor or not my vendor. I need to check with my purchase. My purchase has not confirmed what to do. So I cannot take a call at this point in time. Fourth, I know that this is ineligible credit. Right? So now these are the expectations from a taxpayer. Whatever credit has come, it's like your bank balance. The money which is there in your bank account, I'll say it is my money, I'll spend. I'll say it is not my money, I may not spend. I'll say maybe my money, let me get a clarity. Which customer deposited, I don't know. Let me check that. Fourth, I'll say, no, it is not my money. Now, generally, it will not happen that it is not my money. People will not say. Any money which has come into bank account, they'll be happy to spend. Suppose someone deposited 1 crore, we'll be happy. Oh, 1 crore has come. By mistake, if it has come from a terrorist funding, then ED will come and lift you and put into the jail. This is what will happen with respect to GST also, called fraud, fake billing. So there could be a fake billing which came into your returns. I need to know whether I have to avail or not to avail. Now, these are the reasons, these are the expectations which are there for me as a buyer. Now, keeping into this mind, into mind, they say, for these two, use a window called ECRCS, where you park this money like a go down, like a warehouse. I give a ledger, electronic credit reclaimable statement. So I'll give you a ledger called ECRCS. Whatever credits have auto-populated, this month you don't want to claim, don't worry. You park in a warehouse. Later, whenever you want, you take out of your warehouse. Ineligible, in the same month, you declare as ineligible. Now, doing so, what is happening? Government said that your manual alteration is avoided, right? So this is where your GSTR3B, when you look at table 4 of GSTR3B, where they have given 4A has got 1, 2, 3, 4, 5. These are the windows where input tax credit has to be shown or auto-populated. GSTR1 is on account of import of goods. 4A2 is on account of import of services. 3 is domestic reverse charge mechanism. 4 ISD. 5 all other ITC. Now these are like partitions. Like when you talk about bullion, like silver, jewelry, this gold ornaments, like pearls. Likewise, your all input tax credit for MIS purpose, they have 5 window. This I'll talk in detail tomorrow. 4B. Now this is where they have come with a detailed clarity. 4B has got a table number 1, table number 2. Table number 1, which talks about ineligible credit. Table number 2, which talks about your ECRCS disclosure. Means temporary reversal. Temporary reversal, reclaim later point. So whatever month you got the credit, no, government said, hey, don't alter. You don't want the credit, you disclose that item in table number 4B2, which is nothing but your temporary reversal. You can reclaim at a later point in time. This is your intent of the government, where ECRCS came into picture. Before I go further, are we clear with this discussion, whatever we had so far?
Clear.
Okay. Anything you want me to repeat once again for better understanding?
No.
Okay. So I'll go further. Now, this ECRCS, when you see ECRCS, this is like your T account. Your debit, your credit. So this is where in happens. This is where your out happens. Month 1, when I do a data entry in 4B2, the credit of IGST, CGST, SGST. So month 1, whatever amounts you have entered in GSTR3B, that comes and sits in your ECRCS ledger. So the credit happened in month 1. Means month 1, sir, so much of credit is there. I am not clear whether to take. I am not eligible to take in month 1. So when you want to take, say, let's take example, instead of XX, let me just put some amounts. Assuming that in month 1, there's a credit of 10,000, there is a credit of 5,000, and there is a credit of 5,000. Out of this 10,000, I can claim this in, say, month 2. This I want to claim in month 3. This is my expectation. So debit is where I reclaim. This is entry inside This is entry outside of the ledger. So in month 2, reclaim. 10,000 is what I have reclaimed. CGST, SGST, I have not done anything. Month 3, again, I have reclaimed. IGST, nothing is there. 5,000, 5,000. Right? Now, this is where the credit ledger will be having closing balance. If you see month on month, at the end of whatever you have done, there's a closing balance of nil. So government said, I give you a ledger. Whatever action you are doing in your monthly return in table 4B2, this particular 4B2 comes and gets credited to credit ledger. So whatever you have shown in 4B2, that comes and disclosed on the credit side. Now, to control this outside, this they say disclosure has to be done in 4D1. In month 2, 4D1, I'll mention 10,000. Month 3, 4D1, I'll mention 5,000. So this 4D1 is an indicator how much is going out, of credit ledger. Now, so when I say reclaim, sir, where do I reclaim this? Whatever you are saying reclaim, no? This we need to mention in table number 4E5. Your input tax credit, you see different windows. So they say use this particular window where you want to reclaim. So whenever you want to reclaim, entry number 1, 4A5. Entry number 2, 4D1. So entry number 1, 4A5 to clean credit. Entry number 2, which I do in 4D1, this is to disclose and update ECRCS. Government said that, look, in month one, you have indicated to me in 4B2 that you don't want to claim so much of credit immediately. So you have been allowed to park in a ECRCS ledger. Month 2, now you came and said, sir, out of this 10,000, in month 2, you want to claim 10,000. Then this, how does it happen? In month 2, when I file my GSTR3B, in 4A5, I do a manual entry. This is your manual entry. That means whatever IGST auto-populated is there, I add manually 10,000. So when I add manually 10,000, red color comes in. The moment red color comes in, I go and explain 4D1. Look, in 4D1, this 10,000 is whatever above you have shown 10,000 red color, that is being explained in 4D1. So 2 times I have to explain. In 4A5, manually I add 10,000. Below 4D1, I'll say 10,000, whatever you are seeing above is on account of 4D1. That is ECRCS. So this 4D1, if I don't do, then you may get a notice. This is what ECRCS government has asked us to maintain. Are we clear?
Clear.
Okay. Jashwita, Repika, Venkatesh.
Yes, sir.
Yes, sir. Clear, sir.
Okay. Yes. This 4A5, 4D1, we have to do manually. Now, this is where we need to have a Excel tracker on a monthly basis where every month 4B2. Now, what we will do is, in general, when GSTR2B data is there, this data will be there for me bill-wise. So what we will do is, there is a column. We add a column for either accept or pending or ineligible. So bill wise, what we'll do is we'll mark accept. A means accept. Your pending is your 4B2 data. Ineligible, I'll say IE ineligible, which goes to your 4B1. Pending goes to 4B2. Accept, there is nothing to be done, no action. Whatever auto-populated data is there, that remains intact. So bill-wise, I'll keep a track for this pending data. In, say, this is for month 1. Month 2, when I travel, first activity I'll do is analyze GSTR2B of month 2. Then analyze pending data of month 1. So in case if I have any credit to avail, what I will do is this I'll add manually in 4A5 of month 2. And adding this, I also disclose in 4D1. This is my disclosure. This is manual addition. So in month 2, two things I'll do. Whatever I have kept pending in the last month, I add back. And also I disclose in 4D1. Now, this is what we do in an Excel tracker on a monthly basis with respect to your pending credits. Now, coming back, please keep in mind this updation on the credit side. When you look at this ledger, ECS ledger, on the basis of 4B2 entry, this gets updated. On the basis of 4D1 entry, this gets updated. Now again, we have a challenge. So what if this is done correctly? This I am doing wrong. In the sense, in month 2, for a moment, reclaim, instead of 10,000, I have entered 20,000. Clerical error, anything may happen. Then you expect a notice for 20,000, saying that you have 10,000, why you have entered 20,000. So now, can I rectify? I don't have a choice to rectify this clerical error. So we need to be very, very careful, because when you enter 20,000 in 41, you get a alert, red color will be shown, saying that more than the credit available, you have updated. Some people know, without even checking that alert, they go ahead to file the return. So when you do that, there are chances that you may get a show cause notice for that. Now, this is your expectation of ECRCS. Now, having said that, now there is something called automated notices. Rule 88C, Rule 88D. We'll just understand these rules. Rule 88C. Manner of dealing with difference in liability reported in statement of outward supply and that reported in written. You remember that 75 subsection 12. 1 crore I have shown in GSTR 1. 1 lakh I have shown in 3B. That is where this they are talking about. Difference in liability reported in statement vis-a-vis outward supply in written. So when I have that mechanism, there is a notice under 88C which comes automatically. This is automated. So though they have freeze GSTR3B, there are people who manually alter that. The moment you do manual alteration, you get a show cause notice automatically. So this notice now, when you file GSTR1 and you file GSTR3B, 20th I file GSTR3B, 21st you log into window, there you will see the notice. So people may think, sir, I have not received a postal letter, I have not received email, etc. It is not you may not get, but when you log into the GST portal, automatically this is available. If I don't address this notice, the risk is that they will block your GSTR1 for next month. Whenever there is a gap, when the government sends a notice, and if I don't respond, then I have to, no, my GSTR1 gets blocked. For that reason, we should not keep quiet. We should respond to this particular notice. So here you have this notice where they say, tax payable by a registered person in accordance with the statement of outward supply furnished in GSTR1 or as amended in 1A, if any, using IFF in respect of a tax period, exceeds the amount of tax payable by such person in accordance with the return for that period furnished in Form GSTR3B. So they are saying that, look, my system, the GST system, is comparing GSTR1, comparing GSTR3B. My 3B is less compared to GSTR1. Then they say, by such amount and such percentage as may be recommended by the council, the said registered person shall be intimated such difference in part A of DSC 01B. So here DSC 01B is a show cause notice kind of thing. Not a notice, but it is like a notice. So there is a notice in DSC 1B. This has got part A. So part A is going to mention what violation you have done. Electronically, no manual, it's automated on the common portal. And a copy of such intimation shall also be sent to his email address provided at the time of registration or as amended from time to time, highlighting the said difference and directing him to pay the difference tax liability along with interest under section 50 through DSC 03 or explain the aforesaid difference in tax payable on the common portal within a period of 7 days. Now, this is where we learn from developing countries or developed countries. When we talk about developed countries like UAE, Singapore and all, people say, wow, no, things are very, very far better compared to India. So it's like, no, you have a signal, you jump, you cross a signal when it is in red. You get a notice automatically from the traffic police. And there, the technology is so upgraded. You get a notice, there's a window within 2 days, admit and pay. You don't respond, the debit from your bank account automatically happens for the notice. So they don't wait. Like, you have, like we say, principles of natural justice. When there is a violation, you give a time for the noticee to explain. So if they respond, well and good. If they don't respond, the money is taken from the bank account automatically. Something like that they brought in here, saying that, look, you pay the tax. You don't want to pay the tax, then do the explanation. But within a period of 7 days. This is called automation. Now, whatever mistakes you have done, don't be in a happy mood that officer doesn't know. Because for him, now, 1 is filed, 3B is filed. So for him, green color is shown. Now, even government knows that the GST officers are not that capable to open and check what is there. Now, they use the technology saying that I verify automatically, you default, I send a notice automatically. And you don't respond, then I block your GSTR1. So when they block GSTR1, automatically you'll run to the GST officer, sir, I did a mistake. I should have responded. I didn't respond. Now you take my response. Based on the response, he will open the window. It's like that. This is where GSTR 1, DSC 1B is going to come. The registered person referred to subrule 1 shall, upon receipt of intimation, refer to the subrule either pay the amount of differential tax liability or furnish a reply electronically on the common portal. So when you make the payment, you will make the payment through DSC 03 or you give a reply in part B of DSC 1B. Part A is where you get this notice. Part B is where I give my reply. This is what they are expecting. Where amount specified in the intimation as per subrule 1 remains unpaid within the period specified in that subrule and where no explanation or reason is furnished by the registered person in default or where explanation reason furnished by such person is not found to be acceptable by the proper officer, the said amount shall be recoverable in accordance with section 79. So first they block and then they recover this particular money from your bank account. This recovery is little painful. I'll give you a reason also. There was one instance where accountant month 1 has filed the turnover as 1 lakh, just a hypothetical example, tax as 18,000. In month 1, 3B, they have altered 1 lakh as 10,000, alter 18,000 as 1800. Now, this alteration is genuine. But what he has done, instead of giving a credit note, he should have done a credit note. But instead of doing that, he just did an alteration. And he got this intimation under Rule 88B. He got a notice. This gentleman failed to file a reply. One, he should have given a credit note. Second, he should have filed a reply. But he kept by till month 3. Automatically, this gap of 1,62,000, this was debited from bank account. They gave a letter to the bank attached this money. So they got to know only this at the end of month 5. Now, this generally happens wherever the accountant finds that there is a mistake in GSTR1, he tries to correct that mistake while filing 3B. Doing this, they need to keep in mind, there is an alteration called GSTR1A. He should have used GSTR1A. He has not used. He should have issued a credit note. He has not done that. He should have replied to the notice. He has not done that. Instead of doing all that, he kept quiet. This money was taken from bank account just like that. Why? Law is very particular, saying that, look, if you fail, there's a recovery mechanism. I'll recover that money. Once it goes to the government, painful to get that money back. The example what I gave, it was around 1,68,000. One construction case, it was around 32 lakhs odd. Now imagine 32 lakhs going to the government and getting that money back. It's not that easy. So we need to be very careful with respect to this gap in your turnover. So one is with respect to this rule 88C with respect to liability, what they have reported. Next, rule 88D. Manner of dealing with difference in input tax credit available in auto-generated statement containing the details of input tax credit and that availed in return. What is auto-populated with what is that you are claiming? This is where you get a notice. Where amount of input tax credit availed by a registered person in that return for a tax period or periods furnished by him in 3B exceeds the input tax credit available. Look at the language. Input tax credit avail, input tax credit available. Available is from GSTR3B. Avail is what I enter manually. They're comparing these two. To such person in accordance with auto-generated statement containing the details of input tax credit from 2B in respect of the said tax period or period as the case may be, such amount, such percentage as may be recommended. Right now, there is no recommendation. By default, any gap we are getting notices. The said registered person shall be intimated of such difference in part A of DSC 01C. Earlier 1B, now 1C. Electronically on the common portal, and copy of such intimation shall also be sent to his email address provided at the time of registration or as amended from time to time, highlighting the said difference and directing him either to pay or to explain. Pay an amount equal to excess input tax credit availed or explain the reasons for that within a period of 7 days. Please keep in mind, 7 days they have given principles of natural justice. Straight away, they're not requiring money from you. So they're asking either you pay or give an explanation. The registered person and a sub-rule 1 shall, upon receipt, once you get that intimation, you pay. In case you are thinking that it is wrong claim, pay an amount equal to the excess input tax credit as specified in Part E through Form GSTR3. Using GSTR3 challan, I have to remit to the government and furnish the details in Part B, saying that, sir, I agree and I have paid this. Or give a reply, furnish a reply electronically on the common portal. No manual, it's electronic, automated. Incorporating reasons in respect of the said amount of excess input tax credit that is still remain to be paid, if any, in Part B of 1DC. Where any amount specified in the intimation remains to be paid within the period of that 7 days in the said sub-rule and no explanation or reasons are furnished by the said person, which is in default, or explanation of the reason furnished by the person is not found to be acceptable by the proper officer, the said amount shall be liable to be demanded in accordance with 73-74 as the case may be. Earlier, recovery under 79, but here they issue a show cause notice under 73 or 74 or 74A. So self-assessed tax, they're not giving a show cause notice. Straight away they are recovering. But with respect to input tax credit, they may give a show cause notice. This is a difference we need to understand. This is your rule 88C, 88D. I'll explain once again here. A couple of things what we need to understand. One, we need to check the email furnished. Reason, notices are automated. Most of the time it so happens that the chartered accountant who help in GST registration, it's a legacy. No, they say, sir, why I should trouble you? The chartered accountant or the team of the chartered accountant. So we'll give our own email ID, no, our own mobile number. Don't do that. Let OTP comes to the client, let email or mobile be given for the client. And again, there are few professionals who are more accommodative. Sir, we will give our address. Later, we will change your address. Let's not do that. Check your email, mobile number, address pertaining to the client we have given. Because everything is automated, any email goes to the client. It should be responded by the client. Last week, there was one High Court case where the GST registration was cancelled. This particular company filed a writ petition saying that it was a mistake of a chartered accountant because of which my GST registration is cancelled. So don't punish me, punish the chartered accountant. Gave in the written affidavit. Then the High Court said, it is the registration given to the company, not to the chartered accountant. In a returns are not filed, a notice is given. You are saying that notice went to the chartered accountant who asked you to give the CA's email ID, who asked the number to be given by a chartered accountant. The chartered accountant shall not be punishable. Rather, the company, the director, the company, no key managerial person will be held responsible. Like that, they said, and they have rejected the writ petition. So the courts have clearly said that unless you have evidence to prove that the chartered accountant has been proven guilty, we don't want to interfere. This is the eye opener which happened in the last week, where the client went to the extent of saying that don't punish me, punish the chartered accountant. So learning here is we are there to assist. We are not there to take a responsibility. In the sense, any default, any non-compliance, the call should go to the client, the taxpayer, but not to the article assistant or a chartered accountant. So let's not do this email and all. Mobile number also of personal. Number two, we should understand we should understand how to rectify the mistake in GSTR1. Whatever mistake you have done in GSTR1, please understand, you can amend the liability through GSTR1A. I can do the amendment through GSTR1A. This is what I have to do immediately. Third, understand the disclosure in relation to input tax credit, where you have 4B1, you have 4B2. 4B1 is your ineligible, and 4B2 is your electronic credit ledger reclaimable statement. Now, always know there are clerical errors or clerical mistakes which may happen. Sir, I don't know that it is eligible. By mistake, I have filled here as ineligible. So any data what you have entered as ineligible, this goes out of your credit ledger. So there is a risk which is there. So whenever you have a doubt, park that credit where you have a doubt in ECSS, which is called 4B2, right? And any reclaim to be disclosed in 4A5 and 4D1. So when I disclose in 4A5, the moment I alter, you get that red color. To explain that, I have a justification in 4D1. Tomorrow, I'll show you one example how this 4A5, how this 4D1 is going to get auto-populated. Today, our job is to understand, to file 3B, what all homework we have to do. So we need to park the reclaim in 4A5 and justification in 4D1. This is what we need to understand. Now, yes, sir.
Once you classify a credit
Yes.
as ineligible,
Yes.
is there any way to rectify that again? In case you said now ECRCS is there. Again, out of all the explanation, I made a mistake. I claimed it as ineligible. Is there any way of rectifying that?
Okay, I'll explain that. For the benefit of others, I'll explain this point this way. Say, one live case I'll explain. March 2020, 21. March 2021, ITC shown as 4B1, like example. That means ineligible. So not 21, this is 24. March 2024, I've shown ITC under 4B1 as ineligible, roughly to the extent of IGST around 10 lakh. This is a big amount. After filing the return, after 2 months, they realize that this is actually an eligible credit, wrongly shown as ineligible credit. Now, reclaim is linked to 4B2, but not linked to 4B1. When I say reclaim, I can reclaim in 4A5 only if the entry happened in 4B2. Otherwise, I cannot do that. So here, the only option available is to claim refund. Claim refund under section 54, saying that there is a clerical error. There is a clerical error. Then it is eligible credit. Then give your documentary evidence. You need to satisfy the proper officer that you have a valid tax invoice. You have received the goods. I have used the goods for my business purpose. I made the payment to the supplier. And I have shown in my balance sheet as eligible credit, chartered accountant certificate. Based on all these documentary evidences, when you file a refund application, this money gets credited to electronic credit ledger again. So what went out of credit ledger will come back into the credit ledger. So it's a matter of 3 to 4 months for claiming back that. Yes, lot of paperwork. Till the matter gets no finality, that pain is there. So like no learning here, putting any entry into ineligible is easy, but getting it back later is not that easy. So whenever we have a doubt, we need to park that credit in 4B2. Later, whenever you want to claim, put into 4A5, make a disclosure in 4D1. This is what law is expecting. Any doubts? Vishal, Jaswita, Repika, Venkatesh?
No, sir.
No, sir.
We can go further?
Yes.
Okay. Now, in between all this, government out of over enthusiasm has brought something called invoice management system, IMS. Invoice management system. This over enthusiasm is a killer actually. This created unwanted homework. What they said is to facilitate proper availment of ITC and communication to avail proper ITC and communicate with supplier. I brought this thing called IMS, Invoice Management System. At times, government wants to prove that we did so much. Like India did this thing. None of the countries have done this. One of them is e-invoicing. Unfortunate, actually. E-invoice is one technology or mechanism which was brought in India under GST. This is there in UAE, this is there in Singapore, but completely different what India has got. I would say it's a foolish. You visit Singapore, you visit US, you visit UAE, you learn and come back. Example, person from South India who was traditionally born, brought up in South India, can eat idli dosa for morning breakfast, cannot eat pizza for morning breakfast, cannot eat the bread toast for morning breakfast. Since because you went to US and you've come back and say, hey, look, they have something like e-invoice. Let's also have e-invoice. It's like driving this the James Bond car on the Indian roads. For a travel distance of 100 kilometers, the James Bond takes hardly maybe 10 minutes. But here, for 100 kilometers, that fellow takes 10 hours. Where is 10 minutes? Where is 10 hours? So that's how the technology was brought into India. E-invoice is one nonsense which was brought in. Similarly, this IMS. They say that you communicate with your vendor through my portal called Invoice Management System. Like example, let's say there is a supplier called XYZ Limited. There is a buyer called Mr. X. Mr. X. So XYZ Limited have given an invoice, say invoice number 145. This invoice number 145, the IGST was given as say 12,000. X says as per bill, the IGST is 15,000, but you have given 12,000. This is online. This is as per bill. Now, ideally, what we will do, this X will call up this company saying that, sir, you have given a bill for 15,000, but online it shows 12,000. What mistake I have done? All that we will have a dialogue. So government felt something is wrong happening. Let me interfere. Let me give a mechanism called IMS. So they gave a tool called IMS. What is the tool? Accept, reject, or pending. So no, all of our Indians, we have the cold blood. The moment there is a mistake, they'll say reject. Not even communication, what happened and all. Now, he gave a bill for 15,000. There was a rejection for 3,000. So while filing returns, he got to know there was a rejection. For rejection, he has already given a credit note. Now, the fact of rejection, the fact of credit note was not understood or not received by X. So in a hurry, without even calling up and checking up with purchase department, with the supplier, he presses a button called rejection. So government said, look, I automated ease of doing business. So sitting at your desk, you communicate with your supplier. Now the communication is not like selecting invoice, sending an inquiry, like this is an invoice, I upload the invoice, writing a message, this is what date, this is what you've done, nothing of that sort. Button, like Brahma, he gave a trishul and say either you kill that fellow or you protect that fellow. So Astra is given to act like Mahishasura Mardini to attack or to be like Shiva to protect. So that this fellow has got 3 buttons. He doesn't know the purpose. You click any of the button to do whatever you want. So here, the intent of the government is one, but actually is happening something else. For a moment, I say accept, reject, pending. And by the way, IMS does not have any legal backing. This is nowhere under a section or a rule or a circular which has given a authority for IMS. This was brought as a facilitation window. So anything I do, any notice comes on account of IMS, we can tell to the GST officers that, sir, this does not have any legal backing. This is just to facilitate trade. Any mistakes over there, you cannot have authority to question me. But it has got a lot of ambiguity brought in by what indirectly on account of this. So accept. So if I click a button called accept, the data of ITC travels to GSTR2. When it travels to B, I can claim this particular ITC. So this is a simple window. Whatever purchases you have accounted, appearing, click on accept, comes and sits in my GSTR2B. Reject. Vendor not known. Not my purchase. Even generally intention is if vendor is not known, it is not your purchase, click on the button called reject. But in reality, what is happening? Any mismatch or any ineligible. The users doesn't know what the purpose of this. Sir, it is ineligible, sir. Reject. I don't want this claim. So you have a window called 4B1 where you should have brought and shown as ineligible. Anyway, I'm not claiming. I click on reject. So the moment rejects, this goes back to the supplier. Now, ramification, I'll explain with respect to credit note. In relation to tax invoice, it goes back to the supply saying that your party rejected that. So it is just an intimation. Then something called pending, like your 4B2 reclaimable statement. Now, the entire purpose of that gets disturbed if I click this button called pending. Pending is not clear to avail ITC or not to avail ITC in current month. Now, on account of this, I can keep pending. This is what they say. So, government said that out of your total population, assuming this is your GSTR2B, which is auto-populated. Now, you do an option called accept, reject, pending. Out of this population, you get a updated to be. This is your raw to be. Updated GSTR to be. Only accepted will come and sit here. Your rejected and your pending, that does not travel to updated to be. This is what they have said. So based on this, it travels to your GSTR3B and you file your return. This is what they are talking. My advice, understand IMS, but don't follow IMS. This is not having a legal backing, so don't follow. Just keep as it is. But it's like, no, you are driving carefully on the road. You're careful. What if your opposite party is not careful? He'll come and hit me and I'm going to have a damage. Now that is what is going to happen here. I'll explain that. Assuming for a moment, month 1, I gave a tax invoice for say invoice number 142. I gave invoice number 142, taxable value 1 lakh, GST 18,000. 1,18,000. This tax invoice is not approved by client. Some reason he has not approved. Then what I'll do, month 2, I'll give a credit note called CN 142 for the same 1,18,000. 1,18,000. Now, let's look from the service provider point of view. Service provider point of view, month 1, assuming only this bill is there, nothing else is there. Month 1, output tax is paid for how much? 18,000. Month 2, credit note may be adjusted if there is a tax liability. If there is a liability. If there is no liability, he cannot adjust. Whatever this 18,000 is there, no? This 18,000 he can reduce from the output tax if at all there is an output tax. Now, this is a scenario for service provider. Now, let's look at the intelligent buyer who adopted IMS. The buyer's point of view. Month 1, he kept this pending. He has not, because it is not approved, he didn't reject it. He was very intelligent, he kept it pending. Month 2, I have not taken ITC, so he rejects this credit note. Ideally, he should have kept pending. But over enthusiasm, no, it is not my credit note. He kept rejected. He rejected that credit note. Now, the moment he gets this rejection, month 3, output tax increased by rupees 18,000. When I file my return for month 3 as a supplier, because in month 2 there is a rejection, this has a ramification of increasing my output tax in month 3. Government says, look, I'm not bothered with your tax invoice. Huh? This is how they say. You gave a credit note, but it was rejected by your customer. Because it was rejected by your customer, you pay so much of output tax. Now, the backbone for this, section 34. When there is a credit note issued, corresponding ITC to be reversed by the recipient. This is the unfortunate legal provision where we are going to have a headache. Section 34. Credit note, debit note. This is where law says when I can give a credit note, when I can give a debit note. Where one or more tax invoice which have been issued for a supply of goods or services, where taxable value or tax charged in that particular invoice is found to exceed the taxable value or tax payable in respect of such supply. So point number 1, my taxable value, sir, instead of 10,000, by mistake I've showed 1 lakh. That excess 0 to remove 90,000, I'll give a credit note. Or tax charged, sir, instead of 5%, I've charged 18%. So because of this, I can give a credit note. Or when goods supplied are returned by the recipient. Sir, I have supplied the goods that were rejected or returned back by supplier. So when he has returned, then I can give a credit note. Or goods and services are both found to be deficient. Now, please understand. Secondly, goods are returned, services cannot be returned. Correct, na? Where goods and services are supplied found to be deficient. The moment deficient. Now, goods, what could be deficient? Sir, I supplied 100 pieces. He received only 95 pieces. 5 deficiency. Services not up to the level satisfaction called deficiency. Then the registered person who supplied the goods or services may issue to the recipient 1 or more credit note for the financial year. So the law says 1, 2, 3, 3 circumstances you can give a credit note. Any registered person who issues a credit note in relation to supply of goods or services of both shall declare details of such credit note in the written, that is GSTR3B, for the month during which such credit note has been issued, not later than 30th November. So they are saying that in the month which you have given a credit note, disclose in your written also, following the end of the financial year in which such supply was made or to be made. Provided that no reduction in output tax liability of the supply shall be permitted if, now this is an important point, no reduction in output tax liability will be permitted if input tax credit as attributable to such credit note, if availed, has not been reversed by the recipient, where such recipient is a registered person. Incidence of tax on such supply has been passed on to any person in other cases. So here they say that with respect to your credit note, point number 1, ITC attributable to such credit note, if availed, has not been reversed by the recipient, where such recipient is a registered person. So in our example, when we go back, month 1, I gave an invoice. Whether he claimed input tax, whether he has not claimed input tax, I as a seller, how do I know? Because he kept pending. I am not looking into the GST returns of my buyer. If he has rejected invoice, I'll get an intimation. He didn't do that. He kept it pending. So whether he took the credit, whether he has not taken credit, I don't know. But when he rejected this month 2, that gets added back to my output tax. This is an unfortunate check window which is happening. Now here, when there is an output tax which is increased, in case if this happens, what I have to do? In case if it is a mistake of customer, reduce the output tax. manually. You need to reduce your output tax manually and file your return for this month 3. When you do this, notice may come. Why? There is output tax which was over than what you have paid. Explain the reason. So here I need to get a justification. From whom? From buyer. So this gentleman, buyer, whoever is there, should explain why he has rejected. This is point number 1. Point number 2, documentation. What documentation? I have to give. Sir, I gave an invoice. Look, this is my tax invoice. This particular tax invoice, they have not approved. Look, this is a comments they have mentioned in the tax invoice. What you have done? Sir, I gave a credit note. So when they have given back this tax invoice, I gave this credit note. So I did my job of nullifying this tax invoice with this particular credit note. My job is done. In addition to these two, I'll give my bank statement saying that, sir, look at my bank statement. This party has not made any payment. So invoice is there, disapproval for invoice is there, bank statement to showcase that I have not received money, and the credit note I have issued. Top of all, this justification report, the point number 5, I have to bunch to explain to this GST officer, right? Now, though there is no legal backup for IMS, because of one blunder which could be done called this rejection which could be done by your recipient is a burden to the supplier in a subsequent month. This happens in relation to credit note. This happens to a credit note. So this is all about our IMS, what we need to understand. I'll just quickly summarize what we have learned today. We started with section 15.9, which talks about your self-assessment for payment of tax. When I say self-assessment for payment of tax, I ascertain what is my inward supply, I ascertain what is my outward supply, what is the ITC available, what is the outward tax payable, and what is the tax paid at the end of this particular tax period. Now, tax period is your calendar month. My calendar month happens to be a tax period. Then it will be a quarter. Month 1, month 2, I do a self-assessment and make the payment. Month 3, I'll file my GST return. Yes. So we understood something called payment of tax on self-assessment basis. From there, I made you to understand section 75, subsection 12, where there is a gap in tax payment. Where is this gap? GSTR1 versus GSTR3B, where we took an example of a civil contractor, 1 crore, 1 lakh. When there is a gap, 7512 says that this is self-assessment tax to be paid but not paid. This is what we understood. From here, we have understood the automation which the government has brought in with respect to your outward supply, with respect to your inward supply. Now, when there is the automation, the data was frozen. We have understood what is GSTR 1A with respect to amending the tax liability, which is auto-populated on the basis of GSTR 1. On basis of GSTR 1. Because the government has fixed the liability on the basis of GSTR 1, I can do the alteration using GSTR 1A till I file my GSTR 3B. Till filing of GSTR 3B. Then with respect to inward supply, there is an automation of input tax credit from GSTR 2B. When there is an auto population of input tax credit from GSTR 2B, government has expected that either you avail input tax credit or mark as ineligible input tax credit or park in your electronic credit reclaimable statement. This availment happens in table number 4A. Ineligible happens in 4B1 ECRCS happens in 4B2. Any amount which is parked in a credit, electronic credit reclaimable statement, I claim, I would say reclaim. I reclaim this particular input tax credit in table number 4A5. And I give a corresponding disclosure in 4D1. This is what we have understood. Finally, automated notices under rule 88C D. 88C, 88D. 88C is on account of output. 88D is on account of input. In case of 88C, in case if I don't pay, if I don't give a reply, recovery under 79 will come automatically. In case of input tax credit, I don't pay or I don't give my reply, then a show cause notice will be issued under either 73, 74 or a new section 74A. This is what we understood. Last but not least, we have understood the concept of IMS, Invoice Management System. So this is what we have learned for today. Tomorrow, we will start with GSTR2B. GSTR2B. So what I'll do, GSTR3B. GSTR3B. I'll make you understand various tables what we have in GSTR3B. For these particular tables, what is the source data from where we need to capture, what is expected from each particular data, and what reconciliation we need to do for filing this particular GSTR3B. All this we will understand in tomorrow's session. Any doubts before we wind up for today?
Yeah, confusion. In IMS part, regarding
Rejection.
the supplier would have given it.
Yes.
In spite of the buyer by not taking that it rejects. How can the liability of the supplier go something?
That is how the system architecture was designed. The moment there's a rejection, now government wanted to know because he has rejected, means customer has not approved your credit note. So why should I reduce your output tax?
Rejection comes to credit note.
Credit note. Not for the original invoice. Like the moment I give a credit note, my tax payable gets reduced to that extent. So government said, because your customer rejected that credit note, why should I allow you to adjust your output tax and pay the balance amount? Credit note. If it is for invoice, government is not bothered. You pay, I'll collect the money. So only for credit note, because you are reducing your output tax, you explain, you justify. This is what government has brought in. People are there online. Any doubts? Vishal, Jashwita, Ripika.
That input, how many months we had to credit means I will not claim for April ka June tak. Any 6 month, 4 month, we have the time for that input credit.
There is a time limit, Vishal. Like till November of next financial year, I have a time limit. Say let's take 24-25. For financial year 24-25, till 30th November of 25, I have a time limit. So I have to take an action which is kept in reclaimable statement on or before that. If I cross the 30th November, entire credit is gone.
Tomorrow, any possibilities there? Any that online file GSTR1 and 3B? How to file that option?
Which option?
GSTR1 and 3B ka. That is now a theoretically. Now on how to file for that one? Any option tomorrow?
I'll show you Excel, this PDF file, what is there in GSTR1, what is there in 3B. I'll explain how it will work. Okay, Vishal? Done. Then see you all tomorrow morning, same time, 7 o'clock. Thank you. Bye.